All right, everybody, welcome to another, we'll say episode, we'll say live stream for In the Black. Today is a day that's going to go down in history. Today is a day where the everyman decided to revolt against the machine. And by the machine, I mean the stock market. What we see today, January 28th, 2021, is something that's totally unprecedented, and they're probably going to be making movies about this in the near future. It has come to the attention pretty much of almost everybody, whether you're a trader or not a trader. You've seen the outrage, you've seen the anger of what happened today when Robinhood, Charles Schwab, TD Ameritrade, and a few others decided to step in and restrict the trading of certain stocks amidst an unprecedented rally. These stocks are all companies that are financially probably in trouble. They've been hit hard by the pandemic. We're talking about GameStop. We're talking about ANC. We're talking about Bed Bath & Beyond. We're talking about BlackBerry. We're talking about Nokia. We're talking about stocks that have either been greatly impacted by the pandemic or have struggled to transition from one business model to another, or maybe a little bit of both. And what's happening is these giant hedge funds decided to short these companies. And hedge funds have been shorting companies for years. That's nothing new. They short companies now. I assume if what happened today is allowed to continue to happen, and the brokerages can pretty much have carte blanche to stop trades on certain stocks to bail out the hedge funds, then it's going to continue to happen. But essentially, these hedge funds, billion-dollar hedge funds, shorted these companies. And when you short a stock, you're pretty much betting on that stock to fail. You're wanting the price of that share to fall because you believe it's a failing business, and you want that business to lose almost pretty much, if you can, all this money and go to zero. That's the goal of these hedge fund shorters. When they short a stock, they are betting, they are dying for the stock to go down as far as it can and hopefully even go down to zero. For them, that is considered a win, right? And you'll probably hear a lot of explanations about what shorting a stock is. The easiest explanation I've actually saw that put into very simplistic terms. Imagine, if you will, a gorilla had 10 bananas, and a snake comes by and says, "I'll pay you $1 to borrow those 10 bananas." Not buy, borrow. To borrow those 10 bananas, and I'll give these 10 bananas back to you at a future date. So the snake thinks he's slick and then turns around and sells those 10 bananas because he thinks in the future those 10 bananas would be cheaper and he can just buy them back, give them back to 8 and pocket the difference, right? So imagine he bought those 10 bananas for $10. Snake is thinking that maybe in the future these bananas will cost half the price and I can pocket a $5 difference. Well, what happened with GameStop in particular, because that's the one that's gone nuclear, that's the one that has the most momentum behind it, is in real life, these hedge funds, which are the snakes, shorted the stock. But they just didn't short some of the stock. They didn't short most of the stock. They didn't even short just all the stock. They shorted over 130% of the stock. What does that mean? That means they shorted more shares of stock than actually exist. That's like Snake selling all the bananas, taking those bananas and selling more bananas than actually, shorting more bananas than actually existed. But here's what happened. You had some smart people on this Reddit forum, Wall Street Bets, that saw how shorted GameStop was. And it was a combination of things. One thing they saw was highly shorted. Another thing, GameStop is, it has some value, some sentimental value to it. I remember a lot of people, you would go and you would trade in your games there. You get them 7 games, you get, $2.30 back. But, it was a thing. That's where you went to buy your games. It's a part of people people's childhood. It has nostalgia with it. So you combine that with the ideal they want to save GameStop, with the technical fact that these companies, these hedge funds, have shorted the stock over the amount of shares that exist. Wall Street Bets put out the challenge to its subscribers to go up and buy GameStop stock. And by buying GameStop stock, what they did was, one, it drove up the price, not to where it's at now, but just drove it up initially. And two, what it did is they owned so much GameStop stock that when these contracts expired, that these hedge funds, when they did the shorts, when it was time for them to pay back, they had to buy the shares at market price, right? So they had to buy the shares at market price. So what starts happening? They see the stock going up. They start panicking. Some start buying shares. They start buying shares, trying to get ahead of the curve. The contract might not even be due yet. They're going to get ahead of the curve. And they see the momentum happening, pushing the stock up, and they want to try to buy it. But there's no one to sell. There's no one that's really willing to sell the stock. Most of the stock is locked up. And what Wall Street Bets did is they galvanized a community of investors to hold the stock and not sell it, no matter what. Just to hold the stock, buy and hold the stock, do not sell it. So we got to think, if you short a stock 130% of the shares and you have to pay that back, and let's say the community held, even a fraction amount, there's no way you can get 100%, 130% of the shares because they're holding on to some of the shares and they're not selling it, which keeps driving up the price. So now they have to keep buying it at a higher price. And then doing that forces the stock price up. And then they keep buying at a higher price. And what's that do? It forces the stock price up. And it becomes one of these short squeezes that you hear about, where it's almost a self-fulfilling prophecy at this point, where they have to keep buying the stock to satisfy the contract, but it keeps driving the price up. And all the while, everybody who owns the stock is just sitting there and holding, and they refuse to sell. And this is a tactic that has never been pulled off before. This is a tactic that has never took a community of people and really empowered. When we say people, we're talking about your everyday average Joes, the me's and you's out there that have 9-to-5s but like to trade stocks on the side. Those people. We're talking about people who just got introduced to trading thanks to the pandemic. We're talking about people who some of this is their first buys ever. It's just buying GameStop stock because they believed in, if we all come and stick together, we can drive up the value of this company, and we can drive up the value of the stock price. And it's really paid dividends. It really, really, really put a hurting on those hedge funds, so much so that some of them went bankrupt. So much so that some of them had to get billions of dollars loaned to them by other hedge funds just so they could stay afloat. And once people saw this, it further strengthened their resolve. You hear that people there, they talk about diamond hands. They talk about holding on to that stock no matter what. Not getting paper hands, which means paper hands, they fold. Anytime they see the stock price, it's volatile. So it'll go up and down, up and down. When it goes down, they get scared and sell. They talk about diamond hands, and diamond hands never fold. And they're holding on to this stock no matter what. No matter what the price does, they're holding on to the stock, which is further fueling this rally. And now it's pretty much a David versus Goliath, Troy, where you have the little guy, the average Joe, the me's and you's, the everybody's out there, versus these billionaire hedge funds. And what Robinhood decided to do today, after seeing how much their hedge funds buddies were hemorrhaging money, is they decided to restrict the trade of all the GameStop, AMC, Bed Bath & Beyond, and all these companies that were part of this rally. They decided to say, you can no longer buy the stock, you can only sell. And what's that do? Create downward pressure to force the stock price down. So it's the first time we're seeing open manipulation by a brokerage or several brokerages to force the stock price down to essentially bail out these hedge funds. But in the process of doing that, they're taking thousands, some cases tens of thousands, some cases hundreds of thousands, some cases for people who got in really early, millions of dollars out of everyday people's pockets in order to bail out these billion-dollar hedge funds whose goal was to make a company fold. Their goal was to short that company so bad they hoped it had to close. That was the best case scenario for them, where people would lose their jobs. And they are the ones who are just deemed worthy to be bailed out by these brokerages. And what's even more damning is Robinhood is supposed to be the everyman's brokerage. It's supposed to be the brokerage for me and you, Troy. It's supposed to be the brokerage for the average trader. It's supposed to democratize the stock market, making it available to your everyday citizen. And that's why it's called Robinhood. You rob from the rich and give to the poor. Well, today, Robinhood showed its true colors. It showed us as actually the sheriff from Nottingham in disguise. And what they were really doing is holding up the interests of these hedge funds and billion-dollar investors over the interests of its millions of users. And it's really a sad day. I don't think, when did you hear the news, Troy? At what point did you find out today that Robinhood was going to take this kind of measure of action?
It was right after the close. I woke up expecting to see, excited about what was going to happen, possibly looking at what options or what further action I wanted to take, and seeing that it was actually our kind of group message that we got, and getting that news, and I couldn't believe it. I was like, that can't be real. And the first thing I knew it was going to tank the price of the stock, and that was exactly their intention. When you have all of these hedge funds that have shorted that stock, they all want that stock price to go down. So immediately I'm like, okay, they're going to make billions, and everybody who's got in on this, especially depending on when you got on it, they're all going to lose when this stock was on the way up. It was a profitable stock that had made a lot of money. I was up pre-market. I'm just personally tossing it out there. I was up over $5,000 pre-market, and knowing that this is just going to absolutely crater that, and I had to make a choice. Was I going to hold? Was I going to endure the storm, weather the storm, punch out with my profits right there? I really think they wanted a lot of people to do that. I really think they wanted, and I say they wanted this to end, and they want this so-called retail investor rebellion, this Reddit rebellion to end. And it's not going to. I think they made it worse, to be honest with you. We'll come back to that one in a second. But the reality of the matter is, I don't understand what authority and that Robinhood has to suspend trading on a stock that has not been suspended by the exchange itself. This exchange has its rules. It's a much higher bar for when they are decided that they're going to absolutely get rid of suspend stocks based on whatever the issue is. And there's been all this pressure. The government did not act because there was nothing to act on. This is entirely legal. And I think people need to keep that in mind. This is entirely legal what Wall Street Bets did. It was public. It was transparent. The risks were clear. For anybody who paid attention to that, I had been following Wall Street Bets for some time on that Twitch. So there was nothing at all that people needed to worry about other than the standard risks that go with investing. There were a lot of think pieces, a lot of research done, and they fully explained what was happening there. They fully explained that people, this is going to be a risk. And for the people who got in early, for example, I missed the GameStop wave, and I didn't dive in when it was in its hundreds, $200, $300. But for AMC, I was in early. My original shares bought at $4.55, and then I bought even more as it started to rise, around $10, $11. And they decided to torpedo that. It's one thing for people to say, the traditional analysts have said, these stocks are overvalued, and these stocks should not be worth that, and their bottom will eventually fall out and people will lose money. If the market does that on its own, that's fine. Eventually, that short squeeze will run out. But the fact that they put a thumb on the scale and they decided that right now is when it's going to fall out. Right now, it's where it's going to end because it's costing hedge funds too much money. Hedge funds are going bankrupt. Hedge funds need bailout from their parent companies to the tune of billions. The month is not over of January, and they have lost $5 to $6 billion getting squeezed out by GameStop. And I got to sit
And
there and watch all of these analysts who are absolutely in the tank for hedge funds, for the Wall Street institutional investors. The condescension has been amazing for me. They've been
it
incredibly
is really
condescending.
it's a them versus us. I
It
know you
really
see it
is.
when you watch all these marketing. It's confounding because they're really looking at it at one side of like the average trader is somehow the enemy or the average trader is somehow breaking the system. No, the average trader has finally figured out a way to use the system like a hedge funds use it. They didn't create the rules. We are just actually playing by the rules. And when we started playing by the rules, they said, "Oh, they're winning. We need to change the rules of the
Totally
game."
legal, playing by the rules. And like I said, the funny part is this wasn't a random. This was not impulsive. I think there are people like the YouTuber Roaring Kitty. Yeah, they got funny screen names, what have you. They laid out a theory and a thesis, and they pointed this stuff out months ago. So this is months in the making. It's just that now it is finally caught up. The stock price has shot up so high that they are literally they're bankrupting billion-dollar hedge funds. The owner of Melvin Capital was in the middle of buying a $44 million Miami beachfront property. And you know what? America is a capitalistic society. Make your money. There's nothing wrong with that. And I've always believed that. The free and open market, we have gotten our investments into the market and been making a lot of money doing it. Success, growth, wealth, prosperity. It's a free and open market. And then now that the institutional bankers are losing, they've decided to literally manipulate and shut down that market. It's supposed to be illegal to manipulate the market. But what is manipulation if you colluding with brokerages to prevent the purchasing of securities? If you can't buy and only sell, you're going to see downward pressure on any stock. Pick the stock, say no one can buy it, you can only sell it. That stock's going down. It's that simple. If that's not market manipulation, I don't know what is. What Robinhood did today is criminal, and it flies in the face of all of their founding principles, and they can send all the BS, PR, full court press where they're trying to explain away the decisions that they have made now that they've drawn the ire of lawmakers, they've drawn the ires of the public. I'm sure people are snatching their money out of Robinhood. I'm sure people are transferring their accounts out. They've already dealt with settling a $22 million, if I'm not mistaken, just off the top of my head, issue with the SEC, market manipulation. They've been underneath a PR assault, and they decided to do this. And I love Robinhood, full disclosure. I love them because I love the fact they offered low interest margin, and they opened up commission-free trades and easy options for the people. That was the original mission statement. They did that. And because of them, all the other brokerages had to follow suit and offer these free trades. They had to offer competitive trading platforms. But to see them go full circle where they're siding with these large investment banks in what appears to be collusion, that is punishing for me. And if that's not investigated, then the rules don't matter. We all play by the rules.
Here's your role. I mean,
literally, like either A, Robinhood should be sued into oblivion, and or B, people should be going to jail for massive collusion and driving down the prices of these companies. Before I even get into the fact that these hedge funds are betting for companies to fail, they're betting for those employees to be fired when they go bankrupt. They're betting for these stores to close when they own positions in strip malls and actual malls like GameStop. And we wonder why Main Street America is changing rapidly, because hedge funds are betting against and hoping for when those people lose their jobs and those companies go out of business, they're going to uncork bottles of champagne. They're going to celebrate with steak and lobster as they make another million or another billion to buy a new vacation home.
Yeah, I'm about to say they're going to buy that $40 million beachfront property.
And that's the reality. And that's been perfectly legal, and they've been doing that for decades now. And finally, with the free flow of information, the free flow of trading, the free flow of options trading especially, because those barriers to entry have been removed. You have people out here talking about the quote-unquote, and I don't even like the term, the retail investor. The quote-unquote retail investor. What they mean is the average Joe. They mean you and me. Like they're using this term retail investor. I mean the average Joe. They're saying they don't know what they're doing, that we must protect them from themselves, and in doing so, this is what's good for the market. If that's what's good for the market and you need to protect us, why am I up? Why am I up thousands? Why are people making money hand over fist on GameStop? And now the big institutional hedge funds and banks are hemorrhaging money to the tune of billions, and you think you need to protect us? They're supposed to be the sophisticated trader. They're supposed to be the know-it-alls that make the money, the 20 years experience, et cetera, et cetera. And now we see the memes, because sometimes they illustrate simple points with comedy, of course, but they get to the point in a simple phrase. You have MBAs, 20-year veterans, in the stock market that allegedly know what they're doing. They've made money, a lot of money to prove it. They're pros. But they're getting their asses mopped up by people with screen names like Deep Fucking Value. They're getting mopped up, by Potato in My Ass. That's the screen name. Cleaning you up to the tune of, hundreds of thousands, if not millions. And therefore, action needs to be taken. And I'm watching these investors and analysts hop on TV and talk about things like, we don't know, excuse me, I knocked out my darn, talk about, these analysts are on TV talking about, we don't know who's behind the screen names. We don't know who's colluding. The SEC needs to investigate and unmask. What the SEC needs to investigate is what caused Robinhood to shut down trading and why. And here's the interesting part. AOC and a lot of lawmakers are starting to draw the ire. They've shut down trading, and they hid stock prices. You couldn't even look them up in certain brokerages. That's amazing. And then, so tomorrow, they're going to allow for sales. They're going to allow for purchasing. Even though they say it's limited.
Limited buys. They says, Robinhood will allow. Look, here's something. And, this is something that I'm going to read to you a Bloomberg article.
I'm sorry, give me 1 second. Keep going.
I'm going to read to you a Bloomberg article. And in this article, it kind of details what they, what their inside people are thinking of why Robinhood did this, right? So the article reads like this, not that long, so I'm just going to read it. Robinhood Markets, the trading app that's popular with investors behind the most wildest stock swings, has drawn down some bit of its bank credit lines to ensure that it has enough cash to clear trades, according to people with knowledge of the matter. The firm, according to one person, has tapped at least several $100 million, a significant amount of money for a firm that was valued at about $12 billion a few months ago. Robinhood's lenders include J.P. Morgan Chase, Goldman Sachs, and other companies, according to data compiled by Bloomberg. Representatives from Robinhood and those banks declined for comment for this article. The behind-scenes rush to bolster Robinhood's finances adds to signs that recent market havoc is putting a strain on the company, which has signed up the throngs of retail investors for its app during the pandemic. The firm is among brokerages that have clamped down on trading shares of GameStop, AMC, and others. Which are talking about what happened today when we when they prevented GameStop, Nokia, Bed Bath & Beyond, Express, all those companies. They pretty much did a coordinated effort to shut that down. And what this article, I'm not going to keep reading the whole thing, but essentially what this article is conveying is that they think GameStop is cash strapped. GameStop. They think Robinhood is cash strapped. They think Robinhood is essentially, they hand out margin like candy, right? Robinhood is one of the easiest places to get margin. And people took that margin and went and bought GameStop. They went and bought AMC. They went and bought Express. They went and bought Bed Bath & Beyond. They went and bought Nokia and all these other companies. And when these companies start exploding in value, they don't have enough cash on hand. What this article is insisting that when people want to cash out, they wouldn't be able to pay them, right? They wouldn't be able to pay these people because they don't have enough cash on hand. That's what this Bloomberg article is insisting. Now, do I 100% believe this? No, not really, because Citron, one of the big companies that owns some of these hedge funds, also owns Robinhood. Is it hard for me to make the stretch of imagination that they got a phone call saying, "Hey, you need to look out for these other hedge funds. They're losing money. We don't want them to go bankrupt. They need to stay solvent. We don't want to lose out on all this money. Make sure you restrict trading." Is it hard for me to imagine that that phone call happened? No. Actually, I think it's probable that it happened. But let's say that this is actually the case. What Robinhood did was to try to stay solvent and have enough money to make sure they could guarantee that if you sold your share, you get paid. Let's say that was the case. All right. If that's the case, what's up with the silent treatment? Robinhood initially announced that they were going to do this measure right before the opening bells this morning. That's when they announced that they were going to restrict tradings to sells only, right? We don't hear anything from Robinhood for the rest of the trading day. Not a peep. Then after the trading bell, after the final bell has rang and trading day is over, we get an email from Robinhood telling us that in response to the high volatility markets, that they took the measures that they did in these unprecedented times. Not once did they mention that they might be cash strapped and don't have enough money to satisfy his trades. Now, if that was actually the case, if that was really the case, and they had sent me an email at the beginning of the day saying that, look, we don't have enough money. If these stocks keep running up, we don't have enough money to be able to actually guarantee that we could fulfill any sell orders, I would say, okay, at least I know why you are doing it. At least you gave me a reason. Whether or not I believe that reason is bullshit, at least you gave it to me. You said something. You established some kind of reasoning behind what you were doing. But when they are silent, they create a vacuum for people to do their own investigations, for people to try to link the dots themselves. And you can't, I mean, it's quite logical for people to come up with the realization that I think the general consensus is they were looking out to prevent the failing of these brokerage firms. These big hedge funds were essentially they were close to, some of them already gone bankrupt. A lot were closer to becoming bankrupt, and they did them a solid at the expense of the everyday retail investor. You know what? I said this in our chat. I said this in our chat. I couldn't concentrate because I was so pissed off. I couldn't concentrate because all I was thinking about was how effed up this is. How could they do this? We're supposed to be in a free market. We're supposed to be able, this is supposed to be free trade. And right now, these American companies are preventing free trade from happening. Matter of fact, Webull, which is a Chinese-owned company, opened up trading for these stocks close to the ending day. So you're telling me that I need to move all my stuff from out of an American company to a Chinese company in order to participate in the free and open market. This has pretty much crushed that illusion. We are no longer in a free and open market. And you know what? This is one of those cases, not even going on a side tangent, but this is one of the main reasons why people are big proponents of Bitcoin. Because Bitcoin is decentralized. You can't do this shit with Bitcoin. You can't say, oh, we're going to restrict people from buying, selling, and transferring Bitcoin. We're going to close the market. Bitcoin is open 24/7. Bitcoin is not regulated by anybody. Nobody can control Bitcoin. And for all those people who said that that's not a valid use case, well, welcome to today. Welcome to January 28th, where it became a valid use case. And people have been saying that all along. So if they can do that, if they can restrict your trade, and Troy, not only restrict your trading, in some cases, they went into people's accounts and forced them without their permission, without their consent, forced them to sell their stocks. How is that legal? How is that possible?
And that's the real reality. It's not legal. The SEC needs to take action. People need to be the only people that need to investigate it because they really wanted. I think they really were desperate to have the Wall Street bets people get investigated. And the funny part is that's a wide open. You don't. It's you could just look at it. You
Open
can pull
community,
it up.
anybody.
You could be anonymous. It's wide open. It could be anybody. It's nothing more than a forum. It's nothing more than a group chat. It's nothing more than an email chain. It's open, public for all to see. It's the equivalent of saying we need to investigate people meeting at a Starbucks or a library talking about stocks because too many people are making too much money. But the reality is the SEC are supposed to be investigating market manipulation. If this is not market manipulation, then nothing is. The reality is, and they didn't just suspend trading. It'd be one thing if they froze. You can't do either. If the quote unquote retail investor, i.e., your average Joe, cannot buy these securities, then who is buying when we sell? It's the people and others, and most of them are it's Wall Street. It's these investment banks, it's these hedge funds. I assure you, they recoup billions today.
They covered their losses. So when we talk about
they
these
probably recovered their
short,
losses, and they're way ahead now.
when
All
we
because
talk,
of
yeah,
literally knowing that. And I think I saw one staggering article that 56% of people in Robinhood owned these shares that they restricted.
56%. Now you know how many
Punished.
Robin has? Over 2 million users. Over 1 million people got fucked today.
Absolutely. And we tell ourselves these stories about the American dream of pulling yourself up by the bootstraps, of saving and being smart with money. Well, and using the market and the free open market being the most powerful, and it is. As pissed off as I am, it's reality. The market and all of these things are all of the above. However, today, Wall Street got exposed. Hedge funds specifically got exposed. And the regular people finally began to truly eat. And I'm going to tell you something, before we even got to today, and we've talked about it before in the past, we've talked about it in our podcasts. The regular analyst has had great difficulty in predicting the market, predicting stock prices, because so many new people are now investing their dollars based on both traditional and new thinking. And it bothers the old school. It bothers the old school Wall Street because they know they're losing their effectiveness. It's almost like when we look at, to use an analogy, back in the day of Jordan, you didn't shoot a lot of threes like that. You live by the three, you die by the three. So therefore, the teams would, no matter if you're good at it, no matter if you're making it, if you shot, you could shoot one on a fast break and it can go in. Your coach might sub you out. That was the reality. That was the thinking and understanding. Big men inside, 2-pointers, no, take it easy with the threes. And now we're in the era of Steph Curry, Golden State Warriors, and people are shooting 3-pointers more than ever before, and now winning titles with it. It's a new game. You can't go grab those old coaches, those old GMs. They have to adapt or retire. It's the nicest way I can put it. And the same thing is happening with Wall Street. Everyone has access to research data. Everyone has access to the Greeks. Everyone has access to options tradings. Everyone has access to buying and selling shares at a will, commission free. And they don't know how to handle it. They don't know how to analyze it, and they're getting their asses kicked by people with funny screen names on Reddit chats. And as much as they like to talk up that threat, those are just regular people making money. Some of them have more money than others, but at the end of the day, they aren't the 1%. They aren't Wall Street bankers. They aren't investment analysts. And to see all these analysts out here carrying water about the threat of a damn forum and people investing when they're making money and they need to be protected from themselves. They're making too much money. We got to protect them. The reality is they're losing the game and they've rigged the game. This is the equivalent of the Super Bowl happening and, pick your favorite team. They're ahead by 20 with 2 minutes to go and about to run this clock out and the referee stopped the game and say, we're going to give them the ball and every touchdown they score is worth 50 points now. every field goal's worth 100. Like, they're just changing the rules in the middle of the game, literally in the middle of a trading week, and they're doing so brokerage by brokerage. That's insider pressure that's doing that. They're doing so even before Reddit today halting trades. Yesterday, we know that other brokerages were also limiting options trades and the things of that nature. It's one thing for the exchange to make an action. Again, that's a higher bar, because then they freeze the prices. Nobody's trading in either direction. But for these brokerages to behave on their own, in cahoots with Wall Street investment banks and hedge funds, if that's not criminal, then nothing is. Like, literally, there's nothing to stop them from changing the rules further in any way they see fit.
This started last year, really, with when we talk about a lot of new investors really seeping into the market. The first thing that really should come to mind is Tesla.
Mm-hmm.
Remember how cheap Tesla was? Remember all the Tesla shorts? Remember when Elon Musk started selling Tesla shorts because all the people that were shorting his company? But you know what? Your average investor looked at Tesla. There's only one institutional investor that saw that was a Tesla bull, and that's Kathy Woods. And that's because she's generally on the cutting edge of things. She looks at innovation as a catalyst for profit. But outside of her, almost everybody was saying Tesla, no, it's currently overvalued. It's not going to go up. Tesla's a bubble. It's going to pop. And that's because when we look at, we'll call us millennials and under, when we look at a stock, we don't just look at the numbers. The technicals are cool, right? They have their place. But we also look at the potential of the company. We look at who's running the company. We look at the future vision of the company to see where it's going. And what Tesla investors saw was somebody in Elon Musk who was genius enough, brave enough, and enigmatic enough to revolutionize not only the car industry, but the energy industry as well. Mm-hmm. And when they saw that and realized that, they were willing to put in money, even though the technical said no, even though they hadn't been turning a profit. They saw what this company could grow into be. And Tesla's success really is not only a product of Tesla and Elon Musk, but it's also a product of the average investor, us retail traders, propelling Tesla to these new highs where they have enough to do these capital raises and do all these cool things. It's a symbiotic relationship. So when us retail investors get involved in this stock, we are part of that success story. We are part of writing that narrative. We don't just sit there and say, oh, well, this has a bad PE ratio. Oh, they missed their earnings the last 2 quarters. We don't just look at that. We look at other things holistically and say, do we think this stock has a future? Does this stock fill a future need? Do we see growth in this arena? Bitcoin's another one. Remember several years ago when Bitcoin crashed, right? Everybody was flooding it, all the big hedge fund investors and all the people on MSNBC and all this stuff. They were all Fox Business. They were all downing it, saying, because they didn't understand it. So they said it was garbage. They said it was trash. Lo and behold, we come to find out today that over the past year, all these people have been secretly buying Bitcoin. You find out that companies have been secretly buying Bitcoin. You find out that Goldman Sachs is buying Bitcoin. You find out now that JP Morgan's buying Bitcoin. You find out that Fidelity's buying Bitcoin.
And repositioning so that they can profit off of it.
They can profit.
They missed out the first wave. And then they talk trash about it, stomping down the value of cryptocurrencies so they can secretly position themselves to make money next time.
That sounds like manipulation to me.
You can't make money.
Is that not manipulation?
You can't make money unless they make money first, to ensure that they always make more than you.
They want to make sure that they are always the top dog. They want to make sure that if the game is going to be rigged, it's only them that benefits. And as soon, like you said, as soon as it looks like somebody else is winning, they're going to cry for regulation. They're going to cry for an investigation. They're going to say this is wrong. They're going to, what's wrong? What's wrong is being able to short 130% of the floating stock availability. How can you short more than more stock than actually exists?
Investment practice and a bad behavior well before GameStop shot into the stratosphere. The reality is it's bad to even short a stock about 75, 70, 80%. You should not be able to short more than 100, but legally, so it's actually illegal to have a naked short. You don't have the shares and you're shorting the stock. That is already illegal. And it's legal to short more than 100% of a stock just by the nature of the game. And without getting too deep in the weeds and details, contracts, 100 shares, etc. For most part, is a minimum. That's the average. But to be short, they weren't short 100, 101, 102, 110, 120, 130. They were short 140 or more. There needs to be an investigation as to the legality of that and whether or not somebody's head fudge engaged in a naked short based on those numbers alone. And they're the ones who created this situation. And they got people out here carrying water and acting like the regular people who have taken advantage of that legally, because this information is open and public. The transparency has allowed for the public to get in on this and bet against them. And you want to talk about market manipulation? People are out here talking about, and I get it. We know what the state of GameStop was. They were brought to the brink of bankruptcy and their financials didn't look good. We know the retail sector has been hammered both by coronavirus and even before. This is more and more people who buy things online. But here's the reality. There have been companies that haven't turned a profit at all, whose stock prices who've gone public, whose stock prices have shot up. Take a look at the early days, especially of companies like Uber and such. Not turning profit any damn where. But people investing, hoping that it becomes profitable and they can buy it at these earlier shares, therefore driving up the price. This isn't the first time and the only time of a company stock price going up, whether they were even profitable at all, whether their finances were doing bad or anything of that nature. But this is the first time that your average Joe Schmo was able to turn money into hundreds of thousands of millions doing it. And they caught Wall Street with their pants down. And they don't know how to analyze it. You made a good point when you talk about Tesla. The future is electronic vehicles. That's the future. We know we're dealing with climate change before we even knew that we would have a Biden administration and Democrats in control, knowing that we're going to get to a point where electric vehicles are going to become the norm. Tesla has advanced the technology that made it popular. They've made it sexy to have electric vehicles. I remember, when we were younger, over the 10 years ago, the idea of electric vehicle, you thought of some small, clunky, slow, ugly vehicle. They changed that. And they're pushing technology. They're pushing solar panels and housing batteries, and they're going beyond just the cars. So we and the people, the so-called retail investor, the average Joe, saw that value ahead of even Wall Street itself. So while they're trying to short it, waiting for the bottom to fall out, and doing everything they can to down talk that stock, the people drove it up. And now it's part of the S&P 500. I remember they didn't even want to add it to the S&P 500. There's a lot of people who don't like Elon Musk. They don't like Tesla. And they feel like it's only a result of Robinhood. But if you think about what they're really saying, it's only a result of everybody having the ability to trade, democratizing investing. That's what's done it. They can't control it, and therefore they would rather destroy it, smash it, or do whatever it takes to reposition themselves so that they're at the forefront of it to make money.
So let me ask you this. It's 9:45 in Central Time, and we're looking at Robinhood allowing limited buys tomorrow. Some of these brokerages, other brokerages, saying
and they haven't even explained fully what that is. But
what is a limited buy?
Does that mean I buy one share? What we're talking here? So
can I buy multiple shares? Is it based on the value of my account? Is it based on the volatility of the underlying stock? We don't know what that is, but all we have is the vague statement is that Robinhood is going to allow limited buys. I'm assuming, are you still in AMC?
I am still in AMC for hundreds of shares.
And for transparency, I'm in AMC as well. I got in at the wrong time. Depends on how you look at it. I got in at $19 a share, and I bought a shit ton of options too, on top of buying shares. So let's say I'm in for a penny and for a pound on this one. But what today actually did was I thought about selling as soon as the market opened, but I was so pissed off. And I said, if I sell, I essentially said I let them win. right?
Literally.
Their strategy worked if I sell. So being a stubborn SOB, I said I'm gonna hold on. But
Same here.
now going on to tomorrow, what do you think will happen? Do you think the market will open, they'll get a flood of shares and start doing halts, and then at some point in the trading day, do you think they are going to put another moratorium on buying
The big
these
question
highly
is, we
volatile
don't truly know
stocks?
the answer to what they mean when they say limited, buying options and what have you. If they swing the floodgates wide open and there are no limits, I think the price of GameStop and AMC will ride high and likely close higher than they ended. At this point, I really think that they're doing their best to draw attention to this, and they're hoping the exchanges themselves activate various circuit breakers or procedures and halt trading, and they're not doing it because nothing illegal is happening. All that's happening is Wall Street is losing, and hedge funds are losing billions and need to be bailed out. If Wall Street was allowed to purchase and adjust their contract positions, they were able to get in at a lower price, and they could swing the floodgates wide open, and now they'll make a billions and billions of dollars if these prices shoot up. And I think that may very well have been what we saw happen. They saw that we were winning, and they rigged it so that they win too, no matter what. I'm sure they made money. I'm sure they were able to exercise shorts on the price going down, both before, during, and after the announcement of this suspension of purchasing these securities. So that needs to be investigated. They need to be seizing all sorts of communications, emails, the whole nine yards, to see if there's any collusion there, especially if a lot of these hedge funds who were previously on the verge of bankruptcy make miraculous recoveries in the course of today and tomorrow. Because, like I said, that's pure collusion. If the market's free and they swing open those gates, I believe the stock prices will climb of both. How high, that's a different question, but I believe they will be up. And it's clear. I just took a look at it, especially AMC, because that's the one that, I didn't get a chance to, I missed that GameStop wave. It was too rich for my blood. I let it go. Hats off to all the people who got in that early. But for AMC, we went from negative after hours to positive active after hours, as reflected by Robinhood's app. $3.20 a share, 37% up after hours. If that continues that trend and climbs afterwards, I think we'll see good movement on those stocks, and people are in early. The only difference is Wall Street was able to make their position, so they make money as it should.
So what they did was they probably bought up some shares, and they covered their short positions, and they probably actually shorted at a higher position, because actually it came out that the amount of shorts that were happening actually increased. That means that these hedge funds doubled down on the shorts that they were taking out. They obviously haven't learned their lesson. They couldn't just take their L. They're determined to show that
It's
they were
almost
right.
like Thanos.
Yeah,
Couldn't live with their failure. And where did that bring you?
It's going to be interesting tomorrow. I think there'll be some halt trades. I think at some point tomorrow they'll probably do something similar and prevent people from buying these stocks, only selling. And because I think what Robinhood and these other brokerages did is I think they kind of almost galvanized the retail investor class.
They've made it legitimate, and you're right, they validated the movement.
I mean, if you're looking at it, this is pretty much you versus the man. You're sticking it to the man. If you hold these stocks, you're sticking it to the man. You're telling Wall Street, fuck you, right? That's what you're doing. This makes Occupy Wall Street look like peanuts, because you know what? Now there's actually financing behind it. There's actually
and we're
money
occupying
involved.
a foot in the ass of their bank accounts.
Exactly, and that hurts way more than some people camping outside of a building, right? Mm-hmm. So this is now going to be a war of attrition. Who's going to fold first? Right now, we can obviously see that these hedge funds and big money wigs up over at Wall Street, they got the brokerages in their pockets, most of them. We'll see what shakes of that. I think, and I challenge the SEC, that they need to do an investigation, because it's clear collusion. There's no way you can tell me. The only people that benefit from the wholesale trading buying these shares today is the hedge funds. They're the only ones that could benefit from that. The only ones that could possibly benefit. You hurt the price. You took money out of the retail investor's wallet. It's clear as day, right? That's why you see that there were several class action lawsuits found against Robinhood. The damage to the reputation at this point, I don't know if it's reversible. I'm pulling. I plan on pulling my money out of Robinhood. I've heard people have horror stories of Robinhood before, but I had yet to have a bad experience up till today. And this has shown me a lot. I'm probably going to go over Fidelity. I went over Fidelity. I had my IRAs over there, and I was able to buy GameStop stock, and I bought some today just as an extra FU. I bought some shares. So I think I'm going to open a brokerage there.
Blocking people from buying, knowing that you have so many people who, the quote-unquote retail, and like I said, I hate that term because it's designed intentionally to be obtuse about who you're talking about. Average Joe investors is who you're talking about. Every time you look at something and they say retail investors, there was a point in the day, looking at it, especially shortly after they made that announcement, AMC dropped down to $7, $6.52. Right now, it's at $11.83 before we hit market open and may open with some momentum. They're robbing people of 50% gains there by preventing them from buying when it was low and at those prices. This is complete and total market manipulation. And if they can talk about the cash flow, what have you, like I said, I don't see how there's a fair and just investigation of this that doesn't result in people either A, in jail, or the end of Robinhood as we know it. Let's
be honest. That's not going to happen.
And you know
why? Because at the end of the day,
I know it's not.
These billionaire hedge funds are the ones who put everybody down on Capitol Hill in office, right?
Mm-hmm. I imagine there were a lot of campaign donations happening in the past 24 hours. As they start to see and hear, backlash from both far left and far right wing political politicians.
Let me get my crystal ball, and I'm saying that there will be investigations, there will be hearings, but nothing will come out of it.
Most of them will likely target the forum.
It might be a fine at the worst.
Yeah, exactly. After they've made tons of money, it'll be
after they made tons of money. Yeah. So this is unfortunate when I say capitalism is imperfect, but it's the best. It's not perfect, but it's the best we got. These are one of the flaws. The money, when you have enough money, you can control things that you shouldn't be able to control. Mm-hmm. And I think we're going to see that happen and see that play out over the course of the next several months, because this is going to be some investigations, some hearings, and it's going to be more of a kangaroo court than I think anything substantial will come out of it. I would be shocked if something substantial comes out of it, and I would hope for that, but I'm also being realistic. But this shows me that, like I said, we're not in a free and open market.
This is a bold, flex, middle finger from the ruling banking investing elite.
I'll tell you what.
Just the trades, not to cut you off, my bad, but like the assault on Wall Street Bets in the Reddit Discord. Yeah. They took down their Discord.
They did,
and I told my wife that they're going to come out there and, if you've spent enough time in Wall Street Bets, they use a lot of meme-ish and could be considered by some language. And none of it I've seen was racial. Not one shred of it.
It's not racial.
Months. I saw nothing racial. Offensive, sure. Juvenile, sure. Like I said, you got guys with screen names like Potato in the Ass and just, there's things like that. So the juvenile, definitely. But the reality is nothing racial. And I said they're going to come after them for that. And sure enough, Discord announced, allegedly unrelated to all of this, that they're ending their Discord due to racial behavior, and I call absolute BS on that. It's the greatest coincidence we've ever seen. That's like saying people have been public about driving up this price and saying that was coincidence, and no one all these people bought these shares and no, it's not coincidence. It's directly related. We see Facebook taking down groups. We see an all-out assault on these groups and sharing this information. But the reality is the people have stood up, and this is a moment in history. People are going to continue to share. People are going to have, whether it's a group chat, a clubhouse, a Reddit page, a Facebook page, Twitter, what have you, people are going to continue to share ideas and theses on why they think certain stocks are undervalued, overvalued, and what actions to take to make money.
And there's nothing wrong with that. There's nothing wrong. That's what CNBC is
for. It is
for.
completely legal. It's completely open.
That's what Fox Business for. All they get up there is sit up there in front of a camera and speculate day in and day out. Bring on different people to speculate. What?
And the idea
what's happening is nothing different is happening.
The idea that they will say that's a problem while having the CEOs of hedge funds take out short positions, show up on TV and announce it to the public. We've seen situations where everything from, I've seen companies accused of being total frauds in an attempt to take their stock position after they've taken the short positions on them. And they'll say these earnings are fraudulent. One of the electric vehicle companies, was it NIO?
No, that was you're talking
Nikola,
yeah.
Where they said, they accused of being total scams. Like they're allowed to come up there and say whatever they want to tank the price of a stock after they've clearly have a financial interest in the stock going down. And make no mistake about it, these hedge funds and these investors are rooting for the end of the company. And a lot of the people at Wall Street Bets made one valid point. We, the people, have the right to decide to give a company a second chance. If we want to buy in it and invest in it, and therefore it pushes their price up, that can save AMC when they're struggling to make it through a year. We don't know if we want to get back to the theaters. Movie theaters might be dead, but this investment action might give enough cash for AMC to weather the storm while the public gets vaccinated through this pandemic. This might help save GameStop. And see, one thing about it, when you see companies taking overly aggressive action, when they're trying to shave off their earnings and reduce the pensions and the benefits of their employees and treat their employees like absolute shit, when they do that, it's all for the benefit of the shareholder. Well, what if the shareholders is a new revolution where the quote-unquote retail investor, i.e. the average Joe, says, you know what, you're a good company who treat your employees right and you pay them fair and you give them good benefits, and we believe in you through an economic downturn, and we will spend our money in your shares and we will get that price up because we will back you up. What about that then? There's nothing wrong with that, and that's completely legal. While you have analysts who are openly betting for those people to lose their damn jobs and benefits outright, for these shopping malls to go empty outright, where the people have the right to cast their votes with their dollars and help save many of these companies. And we can remember what the companies behave. This should be a warning and a shot across the bow to all companies. You see that it's obviously, if it came out that GameStop or AMC engaged in wild, outrageous behavior, treated their employees like garbage, they wouldn't. You wouldn't see any of this. But people are able to use their dollars and monies as they see fit, openly, legally, to support these stocks and hopefully save these companies. And by the way, save those jobs and save those strip malls and things of that nature. And that's the right of the people, and people are making a ton of money doing it. And there's nothing wrong with that. The only thing that needs investigation is Robinhood, these other brokerages that impacted trading or options at all. It's one thing for Robinhood to change their margin requirements on a stock. That's fine. They have a right to do that. But to absolutely suspend trading and see the actual impact of the stock of the price fall, that's crazy.
It's criminal to me. It's criminal. It's one of those things where, if you had told me that in the midst of something like this, that was done, I wouldn't have believed you a day ago. I wouldn't say that. Like, I would say that's not legal. They couldn't do that. Well, they did. I would tell you that that's unethical. Even if it was legal, it's unethical. And that's just the wrong thing to do. This is where one of those cases where they looked and they said the needs of the few are going to outweigh the needs of the many here, because the needs of the few have more zeros and commas in their bank account. At what point, are we going to keep allowing Wall Street, these big hedge funds and fund managers to constantly get bailed out in one form or another? At what point do we say you're no longer too big to fail? If you can't cut it, if you made a bad bet, that's on you. If I make a bad trade, that's on me. If I
Nobody's
put my
coming to
money in
save us either.
something and it loses money and it loses value and it's just lost in the open market, that's on me. But when you step in and you purposely manipulate the buying of the stock to force the price down, I really got no words, to describe the amount of betrayal that Robinhood and these other brokerages have shown to their customers. And mind you, Robinhood had a pretty loyal customer base.
Mm-hmm.
I don't see that sticking after today.
They had fans, and I was one of them. And truly, I'm hurt in it. Like that, I believed in their mission statement. I bought into it, and I used their platform to great benefit. And today was I actually had to go back and sleep. I had the choice to just rage. I literally just went back. I just said, you know what? Turned over. I was up early for the market. I literally just had to go lay down and wake up nearly at market end and see what the damage had been done. Couldn't believe it. Had to literally gather my thoughts and just see all of this take place. We are in a situation where investment bankers, hedge funds are going to be bailed out, but the American people won't. We can't even get a stimulus check during an unprecedented pandemic. You have people out of work, people out of jobs, and some of those people have decided to invest and make a little bit of money, and that was too much, a bridge too far, and they had to change the free market, close the free market, and alter the free market, manipulate stocks. Those investment and hedge funds are able to borrow money for next to nothing, free money
Yeah.
that they're able to borrow, and then they take that money and gamble that money into the market, so-called sophisticated pros, and they lost. And they were bailed out with even more money. And they complained and decided to close our goals. They decided to put a wall over our end zone, put a lid over our basket so you can't score any more points until they get back in the lead. Extend the time indefinitely and change the rules to benefit them on the fly in the middle of the game. That's the reality. And they're still going to be able to borrow free money. Can you imagine what our economy would look like if this true transparency continues? Can you imagine what the economy would look like if we could borrow money for next to nothing? For 0% interest rates, just like they can. While we have people pay, and when people are arguing about whether or not we should cancel student loans, and regular people are paying astronomical interest rates in a world in which they're able to borrow it for free and turn around and make money because the government and the Fed gave them money for free off of us, off of every average day Joe's. Like, this is I think is going to be a moment that lives in financial infamy. A moment that, like you said, will exist in documentaries and movies for years to come. Wall Street bets, funny juvenile screen names, 20-year-old, everybody ranging from 20-year-olds. Mark Cuban tweeted, he said even his 11-year-old son made money. People, regular people made money, and Wall Street reached out and said no and put a stop to it because they were getting slaughtered. If they're so smart and they're so experienced and they know what they're doing, why did you get your ass kicked like that? Imagine playing any game of choice. You can play chess, checkers, video games, whatever. This person doesn't know what they're doing. I'll beat them nice and easy, and you're getting your ass kicked. You're getting blown out, and you throw the ball, or you take the ball, go home. You flip the table, you knock the pieces off the board, and you say they need to be investigated. That's what happened today. It's unbelievable, and I really hope lawmakers at a minimum grill these banking executives, Robinhood executives, and everybody else who engaged in what I believe to be criminal activities. I hope they, at a minimum, grill them openly in public. There should be congressional hearings for this, and I hope the SEC investigates this, and I hope the majority of the energy is spent looking at them and not, oh yeah, let's unmask who Deep Value is.
Yeah. Who gives a shit who Deep Value is? Right? It's really, that's a smoke screen. If you are invested in these stocks, I would encourage you to hold. if not for the sheer experiment of the matter, the sheer to see where is this train going to go. We've all who've invested have boarded the train. We got on the train. We got on at different stops. Some of us got stops higher than others, but we all on the train. And at this point, I think we are obligated to see where this train will take us. I have, thousands of dollars invested in this. And you know what? I'm not selling. I'm not going to let them win because now it's, like I said, it's war to me, right? So I'm going to see this thing to the end. What that end is, I don't know. I wish we could tell you that, at the end of the day, we're all going to make, 10x our money, and we're all going to buy Lambos, and we're going to drag race down, I-95 to Miami to our beachfront condos. That's probably not going to happen. At the end of the day, somebody's going to lose out terribly. The way they're trying to stack the deck, it looks like us. But we still have a say in the matter because we can hold on to our coins. As long as Robinhood and other brokerages don't come in and force us to sell them.
Literally just take it from us.
Yeah, literally take it. We can still hold our stocks, we can still hold our shares. So where is this story going to end? And that part is still being written. This story is ongoing.
This battle's not over.
It's not over. I'm one for.
And I think they've thrown fuel on the fire.
Yeah, they're throwing fuel on the fire. I'm curious how people are. I went on to Wall Street Bets and I looked, and what surprised me the most when I looked, and this is a couple of hours ago, it was the support, the international support for what was happening here. Is the international support for the movement, for the so-called retail investors, to try to take a little slice of the pie. The tiniest, we're just talking about a handful of stocks. The broader market is unaffected at all. Nothing's happening to it. We're talking about a handful of stocks that retail investors are taking control of, and Wall Street can't take it. They are furious. They are fuming. And the broader world has seen this, seen the pipe that we're going through, and I've seen people comment on there saying that now that in their exchanges, they're buying and holding. They're buying and holding. They're buying. That's why we see the price go up in the aftermarket. Yeah, they said, you know what, we got your back. We're going to buy and we're going to hold because what they're doing to you is some bullshit, right? So anytime when you see people across the world, once again, I feel like America is doing a 180. We used to be the shining gold standard. Now people are looking at us like, so poor Americans that can't believe your country's doing you like that. And they're buying and holding. That goes to show you something. This is something that's become an international movement at this point. I've seen people that were in India, New Zealand, Scotland, England, Australia, all over buying and holding on these stocks. I'm really curious to see where this goes. I'm really curious. I may up losing all my money. You know what? That's fine. If I lose it fair and square, I have no one to be mad at but myself. I can take that.
And that's
but don't you, Robinhood, make the decision for me. Don't you, Robinhood, tell me you know what's better for you than I do. Don't you, Robinhood, come in and make me lose money by forcing the price down. That's where I draw the line.
My closing thoughts on the matter: we have people who are condescending to the average Joe investor, and they are telling us that you shouldn't do this, you shouldn't do that, you're going to lose money. Think about the people who are going to get hurt buying in, trying to jump on this wave, etc., whatever excuse they want. They don't ever care when people lose money in every other way. They don't care when entire companies go out of business. If everyone knows the risk. Everyone knows that investments are not guaranteed. And if that bottom drops out naturally, which one day, eventually it will, because, again, all investments are a risk, then that's fair and fine. But for them to artificially decide the bottom's going to drop out now because no one else can buy, that's crazy. And that's grossly unfair. They're talking about market manipulation, but they're doing so in a one-sided manner because at the end of the day, they own the market and they get to do what they want and please. And that is not the rules. That's not what's supposed to be happening in that open market. If they are going to put their finger on that scale, then they need to be held liable for it. The decision makers, I can't stress it enough, need to be investigated for. We need to be looking at who's making what stock moves and what communication and collusion possibly exists. Servers should be getting seized. Emails, personal devices should be getting scoured. This should be treated seriously because the people got robbed. There are people in the stories, the regular people, the so-called retail investors, the regular people, stories of people paying off medical debt, bills, student loans, buying homes, doing things, paying their rent in a pandemic. All of that is getting lost in the mix as they send out these. A few analysts have spoke up, a few billionaires have spoke up. Charles Payne, I saw him on Fox News. He talked about it. You know, they've hedge funds have been able to squeeze money out of the market now, ultimately out of the American people. Most of the ills of people, there's a lot of people who talk about wages and capitalism and the ills. Most of it revolves around the stock market and these hedge funds and people who hope and bet that on the losers. Because they must make money in either direction. It's one thing to make money for a stock price to go up. They're trying to make money in both directions, even when it goes down, and they're willing to bet and gamble. This is no different than the subprime mortgages and gambling on those foreclosures that they're going to make money from. That has a chilling impact on the market. That has a real impact on American lives. If anything needs to be discussed and any reform needs to be happen, it needs to revolve around hedge funds and shorting stocks, especially to these levels by large institutional investors moving shares by the billions.
Yeah.
That's market manipulation. Not regular people buying things because they're popular or they're happy, whether it's a meme or not. Whether it's just simply a stock goes viral or not, that's the right of the market. That's the free market. If we believe in the free market, it has to be free. And they can't block access without criminal penalty, an extreme civil penalty. This should be a disqualifying action by any brokerage. And the American people got robbed today. But the battle isn't over. Many people are going to hold, many people are going to continue, and I hope this leads to real reform and change. The money being made in America, it comes from real estate or the stock market. And now that everybody is getting a hand in that cookie jar, people are upset because they're losing power, plain and simple.
So we'll go ahead and conclude this live stream. I want to thank everybody for watching. This has been, like we said, this is day will go down in infamy. I'm sure we'll see a Netflix special. We'll see a movie or two. And you'll be able to tell your kids in the future, hey, I was a part of this, right? Mm-hmm. If you're looking at this, more than likely you're a part of it in some form or fashion. So we want to thank you for listening, watching. Check out our other content. We're going to start pumping out some material more regularly. And, we're looking forward to really kind of honing down and really going to start bring you some of our takes on some of these companies. Like I said, we do things a little different. We look at a little bit of the technicals, but we also look at the overall company fundamentals. What do we think the company's doing? Do we think they're going in the right direction? Things like that. So we're looking forward to bringing you a lot of exciting stuff coming up in this new year. But with all that transpired today, we had to go on. We had to talk about it because the biggest thing about this channel is education, and we want to educate the masses. We want to let you know what's going on because it's if you look on the mainstream news, you'll get a totally different narrative. You'll get that poor Wall Street is the victim, and those mean people that Wall Street bets, those memes over there are
those poor memes who would cost somebody their fifth names who would cost somebody
their fifth names. Our channel is here to try to separate the wheat from the chaff. We're going to give it to you straight. We don't, lie about our positions. We don't lie about what we do and don't do. And we'll tell you whether or not we're in something. Just like we told you today, we're in the AMC, and I bought some GameStop and my Fidelity account just as an extra FU. I wasn't planning on doing this, but when the price dropped, and I said, "Hey, I want to get on that a little bit of that movement too." I did it. But that's what you're going to get with us. You're going to get transparency. You're going to get our honest takes. We're not going to say things if it's just because it's popular, but we're going to tell you things that we're actually doing. So thanks for watching. Once again, I'm Mike.
I'm Troy, and this is
Another
In the
episode
Black.
In the Black. Yep.
We are on Facebook, guys. That's facebook.com/In the Black Money. Twitch, of course, In the Black Money. We also have our Twitter at real_in the black. Check us out and everything. Like, follow, subscribe. Thank you guys very much, and take care.